Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 2nd, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. We'll look at stocks today as they gap to new records. We'll see if this is a breakaway or an exhaustion gap. I'll explain what I mean. I'll give an example of my recent options trade in this stock called Itau Unibanco, symbol ITUB. We'll look at junk debt as semiconductors as they go to new records. This is confirming the bull market if you subscribe to the intermarket theory. Look at treasury bonds. I think they might still push higher a little bit, but then they're in a bear market currently, so we'll see where they will roll over. We'll expect where they're going to be rolling over. Big move on natural gas. Big congratulations to the subscribers. I'll show you how to trade natural gas. It's not for the faint of heart. We'll look at gold as it is. I think it's trying to move higher, but I think it is in a bear market, and we'll look at when to sell short the gold miners and possibly gold as well. And I think cryptocurrencies are about to collapse. I've been saying this, but they're just so close. Let's see if they finally break the support. So the support needs to be broken, and it hasn't yet. Again, MetaTrader indicators are now available. If you need them, let me know. I also have two subscription paid newsletters. So one is called Elite, one is called Speculator. And in Elite newsletter we cover mostly ETFs, but also forex and some large cap stocks. And in the Speculator newsletter we have all kinds of interesting stocks that we cover, and we trade them as well. So you can see these are going to be covered separately for the paid subscribers. Right, let's get right to it. So S&P 500, this is the futures, yes, one exclamation point. So this is a record right there. Let's look at S&P ETF SPY. It's maybe a little bit more obvious. So this is a little bit of a gap here. It's more obvious on a different chart, but this could be what's called a breakaway gap. So even though we're at new records, we can just keep going to new records basically. It also could mean what's called an exhaustion gap, meaning that we have come so far from our entry opportunity back in May of 2020. You can see this is an enormous move, right? And on this chart again, I was going to show that we have this four lines, and this is basically how I trade. I do nothing else. I use nothing else. I look at them pretty much exclusively, and they show me where to buy and where to sell, and this is quite easy and also quite, I don't know, just convenient and aesthetically appealing, I guess. At the same time, you make lots of money because you don't occupy your brain with different extraneous pieces of information. Really all you need is at what price level to buy, at what price level to sell. Do you even want to be buying, or do you want to be selling? Do you see? So all of these lines, they answer all of those questions. And when we see a close above the blue support resistance line, that means we're in a bull market and we should be buying. So this is what we did back in May. And until now, there was not yet a touch of the blue line again. So that means we're keeping the position open. So this is possibly an exhaustion gap, but most likely it's a breakaway gap. So most likely we're going to just keep pushing higher. It's even more pronounced on NASDAQ. Here's QQQ. I'm going to turn off the indicators for a second. I'm going to show you what I mean. It's more obvious. This is a gap. So from 1st of July to today, 2nd of July, all of a sudden stocks just gapped up. This is NASDAQ QQQ. And yeah, So let's see if this is a exhaustion, breakaway, or neither. It just could be a gap. There's another gap right there in between 19th and 20th of May, and it hasn't been filled. And people keep saying that all gaps must be filled, and that's not necessarily true. So we'll just, as I say, play it by ear. With NASDAQ, same thing. We're just holding our positions. If we bought back in April of last year, when the last good opportunity presented itself, you can see that it's obvious, right? There is not yet a touch of the blue line. This is what I want to do. I want to only buy when it touches the blue line because the risk is low. Well, lower than if I was to be buying, let's say up here above the green line. Does that make sense to you? If it doesn't make sense, send me a message. And I've been, basically trying to teach as much as possible. So if you go to MasterCharts Trading, you can also send me a Trading Academy inquiry. And I've been having quite a good success with several students, and at least one is just religiously following my ideas. And surprise, he's making money. So if you have questions, let me know. Seriously, I'm very open to teaching and discussion. It really kind of is interesting to me as well. So right now we're looking at NASDAQ, and yeah, so bears, where are the bears? I don't see any bears. This is a short squeeze, and I explained it already. So short squeeze happens when, let's say, I don't know, let's say you shorted it, I don't know, recently. Let's say you shorted it, I don't even know where to short it. It's just, there's nowhere to sell short. But let's say you shorted it today. Let's say you say, okay, this is it. I'm gonna sell short today. And where are you gonna put your stop if you're wrong? Well, you put your stop above the recent highs, above the record highs. So record highs were today, so you put your stop above today's highs. And let's say Monday it gaps again higher. What are you gonna do? Are you gonna hope that sometime the day after tomorrow, well, actually Monday is a holiday, so congratulations to those in the United States, but let's say on Tuesday it gaps up, and then what are you gonna do Wednesday? Are you gonna cover your short? If you're smart, you will. So let's say you cover your short. What does that mean? It means you have to buy, and when you buy, you add to this momentum higher. So most likely this is going to continue. This is a short squeeze of tremendous proportions. So we'll just, again, keep our bullish outlook. Small caps. So small caps are still dragging. Does that mean that they are signaling something about the economy? Not necessarily. So again, one of my favorite indicators here is this CC, also known as correlation coefficient, and you can see that they are extremely well correlated. This is a correlation to the S&P 500, and as long as it's positive, you can say that they are basically the same thing. Let me show you when it's negative or poorly correlated. So here's TLT, Treasuries, and you can see they're more negatively correlated. In other words, when stocks go up, bonds go down. Makes sense, right? So for the small caps, they correlate highly. So in other words, we're looking for buying opportunities. We're not looking to do anything else here. And for small caps, last buying opportunity was close to a year ago, on 24th of September. How do I know? It's obvious. You can see that the price came down towards the good price level. Good in the sense of the risk was relatively low, because I need to put my stop somewhere. Where's my stop? So if I buy right there, I need to put my stop. I put it at the yellow line, because this yellow line is what's called a trend change. So once it goes below the yellow line, that means the trend has changed to the downtrend. Okay, so this is when we trade stocks. When we trade gold and futures, etc., we use the red line. So right now I'm just talking about stocks, and this is a stock. IWM is a stock, or stock ETF. So when we get to the blue line, that's a good, relatively low risk. So the red line would be like a caution, and the red line we use also for trading, mostly for trading forex, because we trade forex between blue and red line. So it's kind of like a channel thing. But if we were to say, okay, but look, Alex, this thing will probably break to new records. I want to buy it right now. Okay, where are you gonna put your stop? Let's say you buy it right now. You're going to put your stop, I don't know, at the green line. You will get stopped out quite often. See, it goes below the green line quite often. Let's say you put it below the blue line, but that's a place where you normally should be buying. And again, you'll be good, probably get stopped out. Red line is more like a caution for stocks, and the yellow line is a trend change. So again, I'm gonna put my stop at the yellow line, and that's a huge stop, right? You don't want that, right? So you want to wait. You want to find an opportunity. You want the market to come to you. You don't want to be chasing the market. Okay, so right now there are no good opportunities in this particular ETF. However, there are literally hundreds of opportunities that I get with my scanner. So the scanner also we have a stock scanner that looks for things like that, close above the blue line, touch the blue line and close above it. So on average daily we get from small caps, within the small caps, Russell 2000, so this Russell 2000, we get 70 opportunities on average. 70. So 70 stocks do something like this every day just within this Russell 2000. I'm sure you can find good opportunities. So don't chase. There's no point chasing this particular IWM thing. Yes, it hasn't yet made a new record, but that doesn't mean, again, anything because of the correlations. Correlations are very high. Most likely it will make a new record. Dow Jones, pretty much the same thing. So we're very close to new records, but Dow Jones and S&P are like, they're like 100% almost. Look at this correlation, enormous. So let's just wait. Again, most likely new records will be made. All right, so here's interesting trade. This is my actual trade. I traded this stock. It's called Itau Unibanco Banco Holdings. So this is available to trade in the United States, but this is a Brazilian stock. How did I trade it? So I have two newsletters, like I just said. One is Elite, one is Speculator. So in Elite, we mostly trade what's called a pullback. So let's say a stock is already above the blue line, like here, and then it came back towards it. That's a pullback trade. And in Speculator, we trade mostly what's called breakouts. So here's what the breakout looks like. The stock was really beaten down. I mean, if we look back, it just collapsed. Last time it was conceivably in a bull market was in 2019. Okay, and then it collapsed. And it was obviously below the yellow support resistance. So when it's below the yellow support resistance line, it means it's in a bear market. But something happened, and right there where I'm hovering, on 10th of May of this year, 2021, it closed above this blue support resistance line. Again, you can have the same lines on your chart for TradingView. They're available. Just sign up on my site. So what I do is I don't think. I remove my brain. I just like, okay, what is this thing? This thing is a stock. It just closed above the blue line. I want to buy it. I don't care what it is. It happened to be a Brazilian stock of a bank I've never heard about. It also happened to have decent options. So what I did is I bought, the stock was like 5 something. So I bought $6 calls that were expiring in January 2022. I bought them in May of this year. So a little bit less than a year out, but you know, it's still reasonable. It wasn't like, you know, a few months out. I like to buy at least 10 months out, but ideally more than 12. You know, the more out they are, the better, because we don't know if it's gonna go immediately in our favor, like this thing. It basically went almost immediately, or it will just drag and do nothing. So the faster it goes, the better, because there is a what's called a theta decay, time decay. So what I did is I bought this thing, Itau Unibanco calls, and I bought them at 47 cents each. So if you know what this means, it means you need to multiply by 100. So they were what's that, $470, right? Am I correct? Oh, $47, right? So I'm blanking out here. 47 times 100 is, yeah, $47. So I bought several of these calls. I don't remember how many I bought. I calculated them from my account, and also sent this to my subscribers. So some of them actually took the position. Now options, they move crazy. Okay, so at this point it was $47 each, right? But then at this point, when I sold my first quarter in June, they were 90 cents each. So they doubled, you see. However, the stock didn't double. Stock only moved, you know, 17%, close to 20 maybe. So I always say that it's usually like 3 times at least. When the stock moves, I don't know, 10%, the option moves at least 30%. This thing moved close to 20%, and the option actually moved 100%. So that's pretty significant, right? Pretty big move. So that's why I actually like to trade options. The other reason why I like to trade options is your downside is limited. So let's say you bought it here and it collapsed. How much are you gonna lose? You're only gonna lose how much you paid for it. Okay, you're not gonna lose more. Let's say you panic down here and you say, oh, but I don't want to have a loss. Let's say you bought the actual stock, and it went down and closed below the yellow support resistance, and you're like, I don't want to have a loss on my account, so I'm just gonna keep it open and see what happens. And then it collapses even more, and then you have a bigger loss, you see. So with options, that's not gonna happen, because if it goes against you, if it collapses, well, you will only lose how much you paid. You cannot lose more money, you see. In this case, however, it was wonderful and it went in my favor almost immediately. So this is the type of trade, obviously, you want to have. It quickly goes in your favor. I quickly took profits. I sold a quarter. A few days later, I sold another quarter. I like to sell. I'm definitely getting worried when stock comes down below the green line after it moved in such a sharp manner. So I decided to close another quarter. And then a few days later, I'm like, I don't wanna mess with it. You know, it was 47 cents each. It's 70 cents now. If I wait any longer, it might go to, you know, below my entry. So I decided to close the position, and I'm just gonna sit and wait. If it touches the blue line again, I will potentially, you know, re-enter and see if it's gonna go higher. But overall, my profit was 64%. So you can see that obviously this didn't even go to 64%. It went as high as, you know, 20% or so. So again, the reason why I like to trade options is because they move like that. It can also do the opposite, and you will just lose the entire position. So yes, options are great, but at the same time, you gotta know what you're doing. So as always. Briefly, so semiconductors made new record. Here's SMH. This is a new record for semiconductors. Some people were saying that because semiconductors have not yet made a new record, therefore the stock market is in danger. This is no longer the case. The stock market and semiconductors made a new record. The same goes for junk bonds. So here are the junk bonds. I'm going to turn off the indicators for a second. This is a new 52-week highs where I'm hovering. So they have made a new 52-week high. This is confirming the bull market for stocks. But these are junk bonds, you say? Yes. So again, let's look at the correlations. Correlations between junk bonds and stocks are super high. Look how high they are. So they're, for all practical purposes, junk bonds are kind of like weird looking stocks. All right, so I am pretty satisfied that the junk bonds made a new record. This is a good news. Here is something that doesn't correlate with with the S&P. This is Treasuries TLT. So Treasuries have entered the bear market on the date of the insurrection, January 6 here. They bounced a little bit. This was a perfect opportunity on the 27th of January to sell them short. Some people actually took it. Right now what we're seeing a bear market rally. Reason why is because we are in a downtrend, we're bearish, and we're moving higher within this downtrend. So we're approaching this really good support resistance level at 147. It's marked by the red line. I think we will consider selling it short there or buying puts at that point. By extension, TYX, the long treasury bond yield, is coming down because treasuries, bonds move up, yield moves down. It's like a seesaw. So I think the yield will move down a little bit more. I'm estimating it will go down to like 1.8, where the breakout occurred. So around right there on 6th of January. But I don't think it's going to continue lower. I think once around 1.8, we'll see a tapping pattern here in the treasuries. So most likely we'll get to the red line, do something here, I don't know what obviously, and then roll over. So this is the reason why I don't think treasury bond yield, 30-year one, will go much lower than 1.8. And here's one huge win for the subscribers, natural gas. If you traded natural gas futures, alert was sent right there, 16th of April, 42% move, new 52-week high. So this is really big win if you trade futures. I pointed out this potential cup and handle pattern. So this cup and handle pattern with a breakout occurred on 24th of June. There's the breakout out of this cup and handle. Again, I don't look at those patterns at all. I'm just pointing them out that other traders like to trade off of them. So they would have bought it on the 24th of June right there. But then again, you need to put your stop somewhere. And for the forex, I put my stop at the red line, support resistance red line. So forex we trade, continuous instruments like natural gas futures, etc. I trade them between the red and blue. So this is why we bought it right there on 16th of April on breakout. And at that point, we put our stop at the red line. Okay. But here on breakout on June 24th, you're going to put your stop at the red line again. So that is a significantly larger stop. It's almost close to double that much. So yeah, that's why I don't really like this type of cup and handle breakouts or whatever. I used my lines pretty much exclusively, so they simplify my thinking in life. So big congratulations to the subscribers. And coming to dollar forex universe. So here's dollar DXY currency index. So dollar was in a downtrend for a while. It entered downtrend right there on 2nd of June 2020, continued lower. Now it's possible that we're breaking out. So this on 21st of June, I already pointed this out. This would have been a signal to sell short. You can see that the price came up above the red support resistance and then closed below it. But notice how muted the move down was. It wasn't even there. And then we saw another close above the red support resistance right there on 29th of June. and a move higher. So what this is telling me is that the bears are really giving up. So my new thing is we can project the lines into the future, and you can see they line up sometimes really nicely. The the bull market for the dollar is really close. So we're watching it very close. We already see the Japanese yen and the Swiss franc failing against the dollar. So those two are already in a bear market versus the US dollar. So euro is really close behind. Once euro breaks down versus the dollar, then most likely it will continue higher. So this actually has a reason, because I look at gold. I trade gold. So here's gold as a currency pair, XAU over US dollar. When you trade currency pairs, you look at what's the currency pair. So the lower part of this equation, the denominator, is US dollar. If it gets heavier, it gets bigger, it will pull this currency pair lower, which is what's happening. It's slowly pulling this currency pair lower. So what I'm looking for is a bounce for gold into this territory of around 1815, around 1830. If it gets there, or when it gets there, this will be a wonderful opportunity to sell it short, because I think we're going to break these lows after that. So we're most likely going to make new lows after we touch this area around 1815 or 1830. This is where we're hoping to sell it short. And here's gold miners with a similar pattern. So gold miners GDX, again, I'm looking to sell it short around 35.80, 36.30, right there. Once it gets there, we can buy puts. We can also buy ETF called Dust. Not a great idea, but it will work. So this one is a free for you. Finally, coming to a close, I'm sort of running over, but trying to keep it at good tempo. Here's Bitcoin versus US dollar. This is a live chart. To my subscribers, I said that I might actually send a special alert over the weekend, depending, because I'm expecting this red line where I'm hovering right now. So this red line right now is at 32,394. Now, if we see a close below, so you can see that we have not yet closed below it. We saw several touches of this line on the 19th of May, on the 8th of June, 22nd of June, 21st of June, 25th, 26th, and if we close below it, this would be it. This would mean the Bitcoin is back in the bear market. Now, I am getting so much flack for this. I'm just so surprised. Again, I have no problem. I neither love nor hate whatever I trade. I'm very objective. Okay, so I'm looking at this chart and I'm looking back, let's say in April of last year. Objectively, this was a breakout. So at that point I began loving it. So we bought it there. Okay, then there was another great opportunity here in January of this year, and we loved it and we bought it as well. But now we don't love it anymore. It's not that I have some kind of a strong opinion about it. I'm just looking at objective evidence, and objectively speaking, if we close below this red support resistance 32,394, we will collapse most likely. So we're looking at like at least 30% down. Now there are also Dogecoin fanatics, and these people are just weird. And when I pointed out this obvious breakdown on 21st of June of last year, I'm sorry, of this just a few days ago, 21st of June, I mean, this was not subtle. This is a close below support resistance. This is a huge support resistance break. These indicators are not drawn in by hand. They are calculated, you see. So right now what we see is a retest. We saw a retest 25th of June and another, I think, was a touch on the 29th of June. So Dogecoin is already in the bear market. Most other currencies like Ethereum are also in the bear market. In other words, they have broken down. The only thing I'm waiting for is this Bitcoin thing. So this Bitcoin has been just kind of trying to bounce around this level. And I think once it closes below it, it's game over. And I mean, it's game over for many currencies. Many of this, they call it crap coin or whatever, I don't want to swear on the air. I think that if Bitcoin does what I just said, if Bitcoin closes below 32,394, all of this will just collapse. All of this stuff. And people saying, oh, we're like doggy millionaires. And I'm sorry. This is a brutality of the stock of the markets, is that the markets really don't care. They just do what they please, basically. So look for objective evidence. Before, Dogecoin was bullish, so we would be buying it. But now it's not. It's bearish. So we should be, say it with me, we should be selling it short, you see. But if we're not selling it short, at least we shouldn't be owning it. People say, oh, but I own it for the long term. There may not be in long term. This thing could like wink out of the existence and no longer exist. You see, it's possible. All right, head over to MasterChartsTrading.com, one word, MasterChartsTrading.com. Click on products, sign up for my trading indicators. These indicators, the green, blue, red, and yellow lines. You can see how useful they are, and people who sign up, they make money. So that's the trading indicators. If you want both trading indicators and my newsletters, so the newsletters are, I'm going to cover all of these stocks and all of these securities separately. And then also I have the ultimate bundle, which adds the stock screener, which I just showed. So you can also have the stock screener and find stocks that are breaking out or pulling back towards the support resistance. Again, if you have never traded but just really curious, I have now created this trading academy thing, and what's cool is that I have a sliding scale pricing. So if you're super new, have no money, but really have the strong desire to learn, this is for you. Sign up, we'll talk, we'll figure out what's the best strategy. All right, that's it for this week's recap. Again, if you have any questions, let me know. Thanks for watching. Have another great trading week. Bye-bye.